Welcome to StockMarketPending.com. What I'm going to show here is the weekly chart of the S&P 500 on the closing bell today. Today's date right now, 7/27/2010. The time is 1:52 p.m., almost an hour after the closing bell. And what we're going to show is where trends try to turn around from bear to bull, and what the qualifier is at SMF. Okay, one of the things that we're seeing here very clearly now, as we have showed on our other index charts that we have provided you, and what it would all look like. Well, here you are. What's bullish about it is the time of correction. From the time of the correction that we called short here, is that a couple of things have happened. We went into a bear trend because we closed below the 10-week. The 10-week started to decline and descend. So we had 1 week, 2 weeks, 3 weeks. Right there on that fourth week was the confirmation that the long-term bull trend, which started over here, that this long-term bull trend had finally turned into a bear trend reversal, meaning that the SMF bear trend qualifier is the fact that this thing goes down, that 10-week goes down in price, and it did, and 4 weeks closing price below it. Since then, of the beginning of the top of that year, right here, is that they're trying to take the trend back. Basically, last week's body was a close above, and that this blue line, the 10-week moving average, is no longer declining. However, just as I said over here of what the bear qualifier was, the SMF bear qualifier trend on a weekly, we have our own proprietary ways of doing things, is that now that 10-week is acting nice, and you got a closing bar so far. It's only day 2. Tomorrow will be day 3 of this weekly candlestick that you're looking at here. But the important thing is the 50-week moving average, it's above it. That's bullish. The other thing of it is if we were to close out the week, and I will update people, but here's the deal. If I don't close below the high of that bar, that's where trends are made. Now, if you go back to StockMarketPending.com, I did videos about where new bull trend cycles start with high VIX readings. You're going to go have to fetch those videos on StockMarketPending.com and click on the link. Go to DailyStockCharts.com. There's an online trading link there that you can click on. It'll take you there, and you'll see all our indexes here now. So the bullish part of it is that 10-week is at 1084. So let's take a look. 1082.2051. That's my support level. Okay. Now, if I keep going up and I get 2 more weeks above this blue line, that's that 10-week moving average, then I would have 4 closing weeks above. I would have a 10-week moving up. That means that the current summer rally and earnings rally is trying to get some legs off of that double bottom, weekly bottom right here. Okay? And when we took out those highs on positive weekly volume here, that last resistance level, which was half of our Pro Trader bar, SMF weekly bar is what it's called, is that now we've hit the wall of resistance there. And I said in our other index videos, look for 1120 to be resistance. Okay? And so basically this move here, if we go up above that 20-week and take out this weekly high right here, that's 1121.39. That's the high of this down bar. This is the last of the double week selling bar, where we made that low and it stopped at the 100-week moving average. This key top of that bar is at a closing price above there can potentially move us to the next area right here. And let's make sure that we understand that. And that would be 1154 or 1153 would be your next upward resistance if you clear that resistance and that this red line, that 20-week moving average. You already got a 50-week holding you support, which is much more relevant for a bull than a bear. Being short is the simple fact that this has changed, and this is why we're not short. In fact, we're long the S&P. So the indexes, and we told the people the reason why is when it didn't want to break here is it was time to get long. Now, you got a lot of pessimisticness out there. You got a lot of wall of worry out there. You've got a lot of things that are going around for the bear case, which the bear case is always most reality case. And now Wall Street loves the earnings on the S&P. And at least 78%, I think, have already cleared their earnings so far. And we're into the third earnings week right now. So that means as we clear out of the rest of this week, we'll have a lot of S&P 500 earnings. And they're all good. We said that they would be. The reason why they wouldn't make the move earlier in the earnings season was because no one believed in anything. There's still a lot of headwind news. We've got the GDP coming out, jobless claims coming out tomorrow. So there's lots of pessimistic data that would be ripe for selling. However, the S&P could discount that economic news for now and focus more on its broader S&P 500 valuation model. Therefore, understanding how stock markets discount bear news and focus on the bull aspect, and it's confirming that move right here. So basically, the bad news that we already know about could go on the back burner for a short while as the bulls are focusing on the S&P 500 earnings now, and we're going to see if we can, number one, got to have a closing price above 1120 and a new support of 1120. The next area is 1154 in the SMF Pro Trader bar. Actually could be 1153. Let's see if I can get it. Yeah, 1152.61. So let's move with that one up there. That's going to be the show and tell, because that show and tell is where you hit that really good sell-off during that weekly decline. And we never got back above SMF weekly bar. That's the SMF formula bar. And the MMTs understand what their education, what all this means. And even in the double week, another reversal, but now we've made 4 weeks up. One of the things I would like to see is a lot more volume, but guess what? For the players that are involved, that's the volume that we're looking at. Not the ones that aren't here, but the ones that are participating into the market right now. Fund managers are underperforming the S&P. The fear of it going higher and not getting in could make this thing go all the way back up here. It just depends on where the psychological commitment is, and the underperforming fund managers, money managers, or whatever, were very pessimistic on the way down. Now it's like, okay, the train's going to leave the station, so now I got to get in. That would fuel through resistance level. Anyway, we'll keep you updated. All MMTs are updated here now, and that's the bullish case for the S&P 500 weekly chart.